the way we designed your policy, were you able to access that money right away?
The first day.
A portion of that, at least.
The first day.
First day.
I put in.
It's kind of strange.
I made my premium, so I dedicated a $6,000 annual premium, and I put in my first $6,000, and then I was able to take $2,700 out as a policy loan. So I could take out $2,700, put it into a tax-free savings account, contribute it to a down payment on a house. Whatever I please to do with that $2,700, I can do, and there's no rush for me to pay it back. The interest payment on it is usually superseded by the interest payment on the cash value. So in a way, due to the fact that it is a mutually owned insurance company, I'm paying interest to myself.
Hey, what is going on, guys? My name is Matt Branch with 48 Financial, and today we have a really awesome video for you. A lot of you guys on the channel always talk about, hey, or ask the question, are you able to do IBC in Canada? And the answer is simply yes. And this video is going to be perfect for you because we have Richard Saba, who has practical experience with us, one of our clients here. And he's going to be talking about his experience with us, how he's using IBC, and then how I'm planning to use IBC in the future. And we're just going to go over it and answer some questions that you guys have had in the past. And yeah, let's get right into it. So, Richard, do you want to just kind of give a brief description of yourself?
I will. Yeah.
What are your views on IBC? How is it going right now so far in your life? How are you using it?
So Matt pitched IBC to me about a month or two ago, and at first I was baffled. I'm like, this is so overwhelming. What is this? And then I got to learn more, and Liz taught me a bunch, and then I understood how to leverage policy loans. So I am using it to. I've always been a fan of making your money work for you, and all IBC is, although it can be looked at as a way to make your money grow because that's all it does inside of the cash value. It's a tool to use policy loans because you can take out a policy loan against your cash value and put that money to work as well. So you're making your money as effective and as efficient as possible. And it's the best and the most efficient way to use your money.
Couldn't agree more. One thing I want to cover is a common misconception. A lot of people always tell me, but my money's not liquid right away and I have to wait a couple years to get it working. The way we designed your policy, were you able to access that money right away?
The first day.
A portion of that, at least?
The first day.
First day?
I put in.
It's kind of strange.
I made my premium, so I dedicated a $6,000 annual premium, and I put in my first $6,000, and then I was able to take $2,700 out as a policy loan. So I could take out $2,700, put it into a tax-free savings account, contribute it to a down payment on a house. Whatever I please to do with that $2,700, I can do, and there's no rush for me to pay it back. The interest payment on it is usually superseded by the interest payment on the cash value. So in a way, due to the fact that it is a mutually owned insurance company, I'm paying interest to myself and creating that 1% to 2% arbitrage, which I know you love to preach about, which is awesome. And you could put that loan. Obviously, I recommend putting that loan towards something that's going to make you even more money. I'm a firm believer in always putting your money in things that make you more money. And
Chris always talks about cash flow anyway, so that's right.
Yeah.
That's right on par with the channel.
Cash flow,
something that's going to cash flow you more money. And about the arbitrage, it's all about those small little wins that add up to the really big ones
100%.
at the end of the year or your period where you're trying to
even if I
set
wanted
the
to
goal
play
to
it
make
safe
money.
and take this policy loan and put it into a conglomerate stock like Procter and Gamble or Pepsi, which are very conservative blue chip stocks, I get that 3% dividend payment, and I usually get 5 to 6% capital growth from the stock. So that's a nice 8-9% gain, and I'm getting the 5-6% gain from the cash value. It just supersedes my loan, and I don't need to use any of my own money. I'm taking out policy loans. It's just an amazing concept.
That's awesome.
If you can really learn how to flow money. Yeah.
Yeah, so were you a little skeptical at first, when we first started talking? Because I know a lot of people are always skeptical about infinite banking concept. Talk to us about how you felt when you first started getting into it, before you had a policy in place. Did you feel a little bit is this too good to be true? Why aren't more people doing this? Now compare that to what you're thinking is now on the infinite banking concept.
Well, considering that you pitched it to me and we've been friends for a year and a half and I can trust you, I wasn't too skeptical. I was kind of overwhelmed because it was a lot to take in. But if someone that's never met Matthew Branch before is told all this and they're obviously going to be skeptical because it does seem too good to be true. But no, it's not. It's simply because it seems too good to be true from a person that understands how to flow money. If you don't, you can really lose your money and hurt your finances by starting a policy, right? So it's only really meant for people that can understand how to flow money and how to make your money work for you. If you can, it's not really much of a cheat code. It's the only benefit you get is the nice dividend payments and the death benefit. Really, the point of this is to.
That's why we always talk about how it's not an investment and it's simply a banking tool.
It is an alternative.
A banking tool on steroids. A banking tool on steroids for sure.
It's an alternative to a savings
But yeah,
account.
I totally.
And the reason I figured out why it's not so known, and the two reasons is because it's what I discovered, at least. I could be wrong. This is subjective, but I think it's a lot harder to sell and you make less off of it, and it's not fit for 90% of people. So that's why I think it's not too well known, right? And
A normal whole life policy, not IBC.
like a regular insurance
Not
company,
designed in an IBC.
not mutually owned.
Like a regular designed whole life policy will pay the most. It pays a lot.
Yeah.
But when you start adding the IBC, the infinite banking concept, into the illustrations, that's when the agent starts to take penalties off. Not penalties, but it lowers the overall income for that agent or commission level.
Yeah, it's out of all the insurance policies, term policies, whatever, this is the most beneficial to the client, and it is why I love that you are selling it, because it is something you believe in, and it's always in the client's best interest, which I love, because you got to sell something that will actually benefit the client. 100%.
Yeah, that's the crazy thing about the crazy thing is with the whole life policy. I mean, we can make a ton of money off whole life policies, but yet we still implement the infinite banking concept for our clients, coach them one-on-one. We spend so much time not getting paid, and actually just, you could call me whenever, you could call Liz whenever,
I don't mean to
you could
interrupt
call
you.
us, and we're right there.
I don't mean to interrupt you, but the first time, this at one point I did think this is too good to be true, because you're like, I'm going to get you in front of Liz, 60-minute call. I'm like, okay. And it was all free. And I'm like, dude, what? You guys are using your time. You guys are using your time and your whatever to teach me. Like, you guys are busy people. Why are you doing this? And it's simply because you guys believe in this so much and you want to help people so much that you just have that much faith in how good it is. And I love it. And these people are good people. They want one of the first thing Matt told me, I told him, why are you doing this? He said, I just want to help people. And I'm like, okay. And then I trust you, and we're helping people. That's awesome. So yeah, this is the best financial vehicle. Caleb, I wish I knew his last name, but I read the book, The And Asset, and it was it changed everything, because it explained the most ideal parts of a financial vehicle, how it could be tax free, how it has to be, how you have to compound, how it has to be, you have control over how it has to be liquid, and whole life policy hit all of the aspects that Caleb talked about. So yeah, it's just the most ideal financial vehicle.
So with all that said, what are your future ambitions? The importance of creativity when it comes to IBC. What are your plans for the future using your probably multiple policies? If you truly want to go big with this, you always want to reach for the stars, right? And you want multiple policies to really make it max efficient for you. So what are your overall goals, ambitions, if you've thought that far? I'm guessing you have.
Well, I study a lot of rich people, and they all tell me that borrowing money is the way to go if it's good debt, of course, not going and financing a car, right? But so I think if I build up this policy for 10, 20 years, it just this one alone, this is not considering the fact that I'll have like 10 more. It could get to the point where I could take out a $60,000 loan, and I could buy real estate at like I can borrow the entire thing. I can borrow the down payment. The bank doesn't know where that down payment came from, and then I can borrow the rest as through a mortgage payment. I am borrowing 100% of the value of the home. Basically, all the money I make through rents is 100. It's like it's infinite profit because it was $0, right? So there's that. I love that idea. And if I own a business, I plan on starting a life coaching business. I know you do as well. And I want to put some money towards the marketing, which will in turn make me more money. I can take it out as a policy loan, and then boom. So anything that will make me more money that I can put money towards, I will be using the policy loan to do. And with the current state of the stock market, I wanted to take out my first policy loan to buy some stocks, because I'm like, oh, everything's so low. This is a fire sale. I need to buy some stuff. And I actually contacted my agent. I'm like, how do I take out this loan? I didn't end up taking it out, but that's besides the point. Point is, like, I seen the opportunity in the stock market. Boom, you know what I mean? You can do it for anything. That's what it's for. Even if the stock market
and the crazy thing is, go ahead.
Even if the stock market investment goes bad, and I think this is what you were going to say, and your loan interest is piling up, the interest on the cash value is superseding it, so it doesn't really matter.
Yeah, it cushions it. Exactly. It really cushions it.
Is that what you were going to say?
And that's why it's so crucial. I was going to say something else, but yeah, you're totally right about that. That's why a lot of people in crypto, or more specifically Cole Snell from 4-8 Financial, he's directly mentored me. He's told me a lot. I actually interviewed him as well, and that's coming out on the channel soon enough. But he always talks about it having a very great cushion for people who are crypto, because it's such a volatile market. Let's say if one investment goes bad, you still have that policy that's going to make you that 6% that year to really cushion the blow,
100%.
And then pay off your loans as you go.
100%.
So try going to a bank and getting a $60,000 loan in 3 days. That's not going to happen. They're going to ask you for your credit, your employment status, all this junk that you really don't want to have to go through. And just calling the insurance company and saying, "Hey, I want $60,000 as a collateral loan, a policy loan." Boom, sent right to your bank account. Take that, do whatever you want, cash flow that money, and that's the power of it. Really, you can't do that anywhere else. Really,
and obviously we talked today about how you can take out a loan against the entire policy through the bank, because the policy loans are considered tier 1 assets, and that's another thing. Another way you can borrow money through the policy, and it's considered a tier 1 asset while real estate is considered a tier 2 asset, if I'm not mistaken, right? So that just goes to show you.
I'd have to do research on that.
Yeah, I could be wrong, but I'm pretty sure that's.
But a business is, for sure. A business is a tier 2.
Yeah. So this just goes to show
it's better.
Yeah, the belief that banks have in insurance companies. Insurance is the most profitable industry in the world. These policies have been paying their dividends consistently since Abraham Lincoln was president. That's the very long time, 170 plus years. I mean, this is so. Even if I would go as far to say that this is safer than a savings account.
Yeah, and that's also something. That's also the problem I have with IULs, Index Universal Life, or Universal Life here in Canada. There's a problem with that, because even if you wanted to use this Index Universal or Universal Life product as a banking tool, try taking that to the bank. The bank won't give you your money.
Really?
It won't collateralize the loan. They do not because it's so unguaranteed for them. Now take your whole life policy. They're going to be throwing you that money because they know they're going to get that money back eventually if you can't pay off that loan.
And if they don't, they get something even better. Company. If you don't, they get something even better.
Yeah.
So whatever.
Well, that's why, exactly.
Yeah.
So
they're like, okay.
There's literally no downsides.
Yeah,
there's literally no downsides, guys. So yeah, that's really what I wanted to do. I wanted this to be as authentic as possible, guys. Yeah. This was not staged whatsoever. I don't even have anything written down on paper. I wanted to show you how authentic we are. This is a 4-8 Financial client right here.
Proudly.
He loves the infinite banking concept, and he's proud. Yeah. He's a proud IBC, authorized practitioner, but he's doing it right now.
I just want to say, everyone knows salesmen make commission. I believe in this product so much. I'm not licensed to sell it. I still refer people to Matt, and I'm gaining nothing out of it. I just want to help people because I know this is the way to get rich. And I hate how little people know about it, but whatever, right? So I'm
Yep.
gonna tell Matt. I'm gonna.
It's all
Yeah.
about Nelson. Nelson would say it's all about building the 10%, the tipping point, to which things start to really start
Yes.
rolling out and growing.
Mhm.
So, all right, guys. So that's going to be the video today. I hope you guys took something from it. If you did, make sure to subscribe and also book my calendar. Book anyone on the team. They'll provide you the most value. I'm certain of it.
100%.
So, guys, that's going to be it, and we'll see you in the next video.